I don't think anyone fully understands. I feel like the whole country, the economy is getting further and further out on a limb, and it's getting shaky.
Inflation has ran post-COVID, supply chain interruptions, and then as that rebooted, a lot of that pent-up demand really stoked price increases. In 2022, in September, CPI inflation was at 9%. And if you carry that forward over the last handful of years, people are really hurting, whether it's at the gas pump, the grocery store, rent, home prices.
Because it hasn't been that high in a long time.
Yeah.
Welcome to the first weekly CashFlow Quest panel. We wanted to bring on the four of us here, the characters.
We're all characters.
Everyone's got their little thing. So
stop talking about my thing.
So you got Jennifer Purcell.
Hi, everybody. Nice to meet you.
Benjamin Schuster. Tide Eldridge.
Hello.
And I'm Blake Comfort. I would say we're collectively the hosts of the CashFlow Quest panel. And we're going to continue to have guests on as well. But we wanted to do a more regular cadence and hit on like general nice topics that are real time, that are fun, that we think are worthy of sharing and discussing. And we're gonna lay it out here and be ourselves, and we want it to be a free flow conversation. So welcome.
I think we all wanted to start with what is happening in the market today.
I think what people are more, what's driving a lot of folks to be so passionate about this election is just the current state of the economy. Inflation has ran post-COVID, supply chain interruptions. And then as that rebooted, a lot of that pent-up demand really stoked price increases. And so in 2022, in September, CPI inflation was at 9%. And if you carry that forward over the last handful of years, people are really hurting, whether it's at the gas pump, at the grocery store, or rent, home prices.
Because it hasn't been that high in a long time.
Yeah.
If ever.
Well, I mean, 1970s, which we'll probably talk about, it's kind of a similar situation to how it kind of feels today. Mm-hmm. In 1970s, you had really high inflation during the Volcker years, and it was also coupled with stagflation. So you didn't have a lot of growth. And to me, you look at the data, but it feels as if people are starting to get to that breaking point, whether it's like people talk a lot about credit card balances and it seems like people are starting to cut back on the spending. People went a little, it seemed, I won't say crazy, but they got excited during COVID. A lot of free money, stimulus was getting pumped into the economy.
Well, the best way I've heard that explained is it was demand pull, meaning it was like people were freaking out that they wouldn't be able to get something later. Yeah. So they bought it, even if it was inflated in price, they wanted to buy it and have it now so that they had it, and they everyone was wanting to make sure that they had their bases covered.
Well, with the supply, they were worried about the supply, right? So it was like, okay, better buy this now, even though the price is super high,
new trucks,
that I can't
cars.
Get it. Yeah.
It was really hard.
Just going on that 70s point, that was the Carter era, right?
Yeah, part of that was the Carter era towards the later half into the 80s.
And then it also had something to do with gas and oil. There was like a shortage that they were dealing with.
Yeah, there was conflict in the Middle East, gas prices and oil production, oil production shot down and gas prices shot up. And that was a lot of the conflict that was happening across the Middle East, and then as well as with Russia. And so there's a lot of similarities, I think, to like the 1970s and then to the 1930s as well, because you have this era of what it feels like. I mean, as a consumer, I always talk about, you see CPI, and we could talk about how ridiculous CPI is calculated, but just how do you feel as a consumer? I think that's like what people lose sight of. They get so hung up on looking at headlines or what's in the news and the paper and what's getting told you, but like, how do you feel as a consumer? And I think that consumer confidence is like one of the most important indicators of any economy. And I don't feel as if consumer confidence is very high right now. Hence why this election, which we'll probably talk about, is, so polarizing, and people feel like it's one of the most important elections outside of all the other kind of more hot button stuff that's like talked about on CNN. I think just really it's just normal people that are feeling the stress of higher prices and wages that have stayed relatively flat.
Right.
Amen. Yeah, the best way I've heard it is like if you take groceries, is like it's like, oh, the grocery businesses are taking advantage. It's like they're like a 1% margin business. Like they're like it's not the grocery stores, it's the supply chain, or just how much it costs. If fuel goes up, it costs you more to get the eggs there, and it's wild. So it's really just how it feels.
It's the alleged price gouging, right?
Yeah,
That's getting
yeah. That's the
I don't know if you guys saw that thing with Cuomo where he was on the floor of the DNC, and ultimately like all of those mainstream grocers are at those events. They currently fundraise with the Harris Walls campaign. So like their sponsors is like, it's really just kind of a talking point. It's not a real, it's not the cause obviously of inflation. I was just watching something that I thought was pretty interesting. They made the point that after COVID, we saw a 30% rise in inflation. And now we're creeping up annually, but like that giant jump hasn't ever been addressed. So whenever there's like a lowering or a pause in inflation, you always get that kind of conversation like, oh, it's getting better. We've done our job. Well, it's like, how did you address the big jump? Like, that's what's really hurting the American public.
One is that supply constraint mixed with a pretty good chunk of demand because everyone's freaking out. So it's kinda
CPI
wild.
is calculated year over year. Right. Quarter, it's Q3 of 2023 versus Q3 of 2024. And it's that compounding effect. Right. So I think CPI came out, the most recent print was like 2.4%. Right. But that's 2.4% higher versus Q3 of 2023. But then when I talked about the 9.1% that was clipped in 2022, it's that stacking effect.
Yep.
And you're exactly right. Like that hasn't been addressed, that, the run up that happened, post COVID or during COVID. And that's why the consumer confidence, they could feel it. Like prices aren't going down. They're just continuing to go higher, but we're not catching up from how far they went up. And like housing prices is a perfect example.
Totally.
And affordability. Because
same thing with the market being all-time highs.
yeah, there's a lot of money in the system for sure. I mean, with quantitative easing that was implemented after 2008 to get us out of that crisis, which I think was warranted and was a very, very smart thing for the Fed, whether you like it or not. If they had not stepped in and printed money and saved those banks, like we would have been in the Great Depression. There's no doubt about it. There was so much contagion and so much stress in the market. But now that it's like the floodgates, right? And then it's not only just the Fed kind of stepping in, but then it's also fiscal policy. It's the government spending so willingly, right? Whether it's the helicopter money that was implemented, and helicopter money, basically dropping money in on consumers, giving them $600 checks. We're in California, right? So we see that a lot that happen. It's so funny, and I'll end with this, but it's so funny. I remember California, the state had a budget surplus. We had a budget surplus during COVID, and now we have a huge budget deficit. And I remember during COVID, all my, people I knew were getting like, money for gas, like these gas cards, they were getting all these checks, and some of the people didn't even need it, but like, oh, I just got another $700 or I'm getting another $1,000 in a couple of weeks. Yeah. Right. Yeah. So, and it's just, it's the waste. And this is the cause of that is that inflation.
The thing that drives me crazy is the unaccountability of them just operating completely out of like a budget surplus. I mean, sorry, like over budget and going over budget year
every time,
for the last 30 years. That's just so disrespectful to the American people. It's just a bummer.
What's crazy is all of the like money that's being given, all of these things. Well, if you don't have any money and you're giving money, well, how, like you're borrowing on that money, right? So now, in order to pay for aid all over the world, you're basically raising debt on yourself. Like you're giving money away for debt. It's, you know what I mean?
Yeah,
it's just to flow and stimulate the economy. I think the best way to explain what's happening globally is the fiat currency system that we're all on. The entire world doesn't have a currency that's actually backed.
Which is really interesting. Like, this is something I think about a lot. Historically, you always hear like, well, fiat currencies always fail, but never in world history has the entire world been operating off of printing fiat currency. Like, it's the first time ever.
Mm-hmm.
It's like, one country might be really sound here and there throughout world history, and a couple of like Romans start watering down their gold or silver coins or whatever their currency was at the time with different metals. Like, that has always been happening. And so it's, instead of like a paper dollar, they were just watering down the metals and making them less valuable. And it's always been the same. But so there's never been a fiat currency though in the history of the world that has actually survived.
Well, what happens when the entire world is using it?
Which is a good segment to our second point. So we kind of wrapped up the market, which is just kind of dizzying and it's high and everything's kind of fluffy and a little bit frothy on the market.
Yep.
United States stock market. So
Treasuries.
Let's move on to what in the world is happening with treasuries, because treasuries are in our bag, our bag of worms or bag of tricks, is that we're borrowing money all the time on our real estate assets, utilizing treasuries as the benchmark most of the time.
And it's what we watch in the real estate industry.
Treasuries are very different from the world we've come from. I feel like they're moving in a more volatile nature now. And it's interesting to watch, like, as everyone's like, okay, the Fed reduced interest rates 0.5 point, and then treasuries go up substantially.
Yeah, I think even just looking at like the 10-year treasury yield, it was, 3.6%, I believe like 2 months ago. Today, it's like hovering around 4.2 to 4.3. So, that's 60 to 70 basis points increase in just a handful of months. And, I think people get often confused with what the hell the yield curve is in treasuries and how those rates impact global markets. But then it's not just the Fed control. They don't control the entire yield curve, right? They're just focusing on the Fed funds rate. So they're cutting the short end of the money supply, in that they're cutting the rate that banks borrow, interbanking borrowing that happens with other banks for overnight. But that then, is bringing down the front end of the curve, the short end of the curve. But people, often kind of lose sight that the yield curve is currently inverted, meaning that the difference between the 2-year and the 10-year, the 2-year has a higher yield than that of the 10-year. And usually, if you look back in history, an inverted yield curve is really a precursor to a recession.
Yep. And they inverted, and now they've uninverted.
It's again. Starting to uninvert. And so what I think is going to happen, and we've talked a lot about this, at the firm, is that, internally, is that I think that the 10-year is going to be range bound in this area between, call it 4.5, and maybe 4.75, as the front end of the curve starts to come down and we start to uninvert and get into a more normal yield curve. And so I think that some people are naive into thinking that just because the Fed is going to be cutting rates, or they're on this rate cutting path, that's going to transition into like 10-year treasuries or 7-year treasuries coming down 1 for 1. It's not how it works. And we could probably talk about, which I know, Blake, you love to talk about too, like, other external factors that are playing into what's happening with the yield curve. And then the only other thing that I would kind of point out too, and then I'll leave it there, but is that markets at a high level are supposed to be efficient, right? So that means that of all the information that's out there, it's priced into the market. So when you saw the 10-year come down to 3.6 and you saw Treasury start to dip most recently leading up to the Fed cutting, the market was pricing in that we were going to pop into a recession, and that the Fed was going to go on this aggressive rate cutting path, pushing yields down, prices up, the price of Treasury bonds, because it's an inverse relationship. However, we had a couple of economic prints or economic reports that are showing that unemployment is still staying pretty low. And like good news is bad news in the market today, which is just crazy, right? But if we get any good news in the sense of, employment's really low, things are good. The Fed might navigate this soft landing, then I think we will see exactly what I just talked about, this yield curve uninverting and 10-year treasuries sitting at, a place where they are today, if not a little bit higher. And I think that would be normal.
Well, and just to be clear, so the treasury rate right now, I was just pulling them up. It's the 2 and the 30 or the 2 and the 10 that is the inverted.
2 and the 10 is what people look at.
I think they uninverted.
Recently, what are they at today?
So right now, the 2-year is at 4.146. The 10-year is at 4.254.
Okay, so there's a spread there.
So they're real similar, but you're they are uninverted.
Yep.
Because you, in theory, the longer you put money out in on a loan, the more you should get paid, so that you are holding a note that is paying higher interest the longer it is borrowed.
Yeah, it's risk, right? Risk return. The longer you have,
with inflation at normally 2%, now it's 3-4 or more of a settling in closer to 3 or 4. Now it's like, well, why the hell would I put a 30 years 4.47?
Yeah.
It's like to put out a 30-year note now, it just is kind of wild. Like, you're not getting enough interest to really lend that money
for that amount of time.
Which makes sense that you would be, the banks are lending it at 6.5. They're making a 2% spread on above the treasury or whatever.
So for me, something I think about a lot too is how much of this is just narrative, because even when they started changing the interest rates recently, it felt a little soon. And now it feels like, because they came out with this whole list. We're going to do it 4 times this year. And then now
the market's pricing it in.
Yeah, the market's pricing it in. We haven't seen it at the housing, like lending rates on real estate has not really changed. It's not a benefit for the consumer. And now it feels like they're going to start raising interest rates again. It's kind of like the way I feel it's going. And what we've been talking about for a long time, we've always pretty consistently been like, interest rates are going to go up. It just seems like part of it is a narrative to kind of make things seem like they're not on fire.
Well, and I don't think anyone fully understands. I feel like the whole country, the economy is getting further and further out on a limb, and it's getting shaky.
Yeah.
It's like, how far can we go out here before something completely snaps? And that's where everyone's sort of like being cautious. And there's like, I feel like I can sense that nature in the air. And so something that I think is really important about this dialogue is with treasuries. You should understand, if you're just a person that's functioning in a complex, very complicated economy today, you should clearly understand what a fiat currency is. Then you should understand that gold is now a tier 1 asset, which means banks can hold reserves legally on their balance sheet as gold, which it just recently, in the last handful of years, I could look up, but it's just a handful of years when they recategorized gold to a tier 1 asset globally. And so that changes the game. Yeah. And, historically speaking, Ben and I were talking right before that, historically speaking, the nations around the world, when they're settling with the United States in foreign exchange currency, they would bring in their currencies and they would convert them to dollars. And there was this kind of business operating norm where they would settle in dollars across a lot of different trades within the country, U.S. to outside U.S.
Yeah. And just putting a finer point on that is like, oil markets are a great example. You had to settle in U.S. dollars.
The petrodollar is that.
Yeah, and now that's starting to.
Right? Didn't they just move away from that?
Well, now they've so they've now been able to settle in yen and rubles. So the Chinese dollar, if you will, and then the Russian dollar.
Joined BRICS. This is of the last week.
Yeah,
so that's a heck of a story. So the Saudis got off the dollar standard, the petrodollar. They no longer have to settle world oil trade in Saudi Arabia with dollars.
Yeah.
It's a big move.
That's a big move. Yeah.
It definitely
is a core shift.
And then something that we also were talking about is that, on the gold or just real assets, which we'll probably harp on because if it's probably not already clear, we're real asset owners and investors, and we believe heavily in owning real assets. Yeah, hard assets. Sure. And now a lot of these nations, everyone has reserves, right? Every country has reserves, and more countries are starting to buy more gold, silver as those reserves versus holding so many dollars in their reserve currencies. So that's
the kind of the amazing moment in time to always remember now is when Biden basically caused this shift, which in like all of my like gold bug kind of hard asset guys I follow, he and or the administration, our country in total, seized all of Russians' foreign exchange currency. Dollars and to the tune of like 600 billion. It was massive.
Yeah.
It's like $400 to $600 billion. And they were using that as their settle with trade. Well, when the whole Ukrainian Russian war broke out, we took it. And not only did we take it, we like seized a bunch of other assets too. Like there's a yacht sitting in the harbor in San Diego.
Yeah.
And my buddy actually cleans the flooring on it and just maintains it. And we're now having to maintain this yacht. That's a Russian oligarch yacht. It's like $2 million a year to maintain this. It's on taxpayers because we seized it.
Wow.
And nobody wants to buy the damn thing because you'll probably clipped. You know, they'll just take you out.
And Russians.
Nobody wants to buy that dang thing.
Watch out.
So they took the foreign exchange currency away from Russia and then funded Ukraine. So like that's just setting aside the belief system around the war and the moral issue there, setting that aside, just economically speaking, that's a problem. Now, if you're China, if you're India, if you're any of the other BRICS nations, now they're adding more and more names as of the last week. There's like 4 to 6 new members into BRICS that were not part of it last year. So
who are they? Do you know?
Well, it's
Brazil, Russia. Let's go down.
India.
There you go.
China and South Africa.
Yep.
Those are the 5. And now Saudi Arabia just joined and a few more decently sized countries. And so everyone now is shifting from holding dollars as the main base currency to gold.
Well, let's make sure we hit the point though that you were making before is by doing that, America sent a message to the whole world that if we decide we don't agree with you on something, we literally can basically affect you.
Steal your money.
Yeah.
And that's kind of a really terrible precedent that we set.
It is. So then with that, the shift and the reorganization of outside the U.S. trade settlement is what's occurring.
Right.
And that's where I think feeds into the the treasuries in general, was they used to hold treasuries as a source to generate interest on their foreign exchange currencies in capacities. It wasn't. So in general, maybe treasuries were just a slice of that. But in general, they're reducing their exposure to dollars. Across the entire spectrum, which is going to hurt us from like the buying power of the dollar.
Current policy stays the same. So, we're going to get into this in a little bit, but I do think that part of this whole Trump energy plan and us becoming energy independent, we sit on the largest oil reserve allocation in the world. So it's like, there's a lot of opportunity for America to right this ship and become a global powerhouse again. Obviously, we're the number 1 economy in the world, but I think that we're, I think that that's part of what this policy is like, we're going to really drive American growth in GDP through energy.
And I think, and just like tying what you just said to what he just said, and like, we're always glass half full. We're very, optimistic. Is if this all happens and the dollar devalues, we start onshoring and reshoring more manufacturing onto U.S. land, it will make our exports then cheaper, driving growth for the U.S. economy. So it could be a good outcome or a reasonable outcome in that if the dollar reduces its strength, it gets devalued, our exports then become more cheaper for other
inflation.
Exactly. And then it could help us grow as a nation and be more of a an export nation. And I'm sure
self-sustained export nation,
self-sustained,
focusing a little bit more on production on the inside.
Correct.
Right.
And
which
so
would
it
help
could,
the economy overall.
That will shift the scales a little bit to mom and pop.
It will.
Like that because basically you're reducing our buying power globally, which will settle. We're all going to be settling locally, just buying groceries and gas.
Yeah.
And so it will change that scale system of measure. So
let's talk a little bit more about the onshoring, reshoring, all the shoring.
Yeah, we love to sell the onshoring piece because it is a good story for the markets that we like to focus in. We like to focus in Phoenix as one of our main focal points, but also Arizona. and Texas. And now one of our main focal points is Dallas. And so go ahead with onshoring and how that's kind of looking.
And all the different kind of types there are. And
tell us what it is, Benjamin.
Yeah. So
we also had an investor request this. I want you to speak more about this onshoring.
Perfect. Happy to.
I'll give kind of, and I'm not an economist there, a historian, but I will give, some broad strokes of what's going on and why we're excited as investors to be investing in some of these markets that are benefiting from the onshoring or reshoring or friendshoring. So what are those? I'll define them first, right?
So there's three.
There's three. They're used interchangeably, but that way, if someone's reading it or hears it on the news, they can, tie it back to what it means.
Sure.
So, onshoring just means bringing manufacturing onto domestic land, right? Reshoring means that if you've already outsourced, supply chains or manufacturing abroad, you're reintroducing it back on a domestic land. Friendshoring means that you have manufacturing plants in China. You're then going to friendshore to our friends that are closer to us, maybe in Mexico, Canada, or Latin America.
South America,
right?
Okay,
so you're hearing maybe European countries as well, but you hear the friendshoring. And then offshoring, I think everyone knows what offshoring is. That's just effectively what really happened following World War II and really accelerated during the 1990s after the Berlin Wall fell, is like this hyper focus on globalization and being able to do things cheaper and more efficient by offshoring supply chains and manufacturing to the cheapest cost of labor or locationally that made the most sense because it was maybe the closest to the hard materials that got put into the widget, what have you. So that really took hold and helped, alongside technology bring down and had this, we've really lived in a state of deflation over the last, call it, 20 years, just throwing a number out there. And it's really due to globalization and technology, right? Efficiencies in technology that really brought down overall the cost, right? That's why we can buy stuff on Amazon and,
So you're saying there was a counteracting deflationary offshoring to what we felt. And that's what maybe held our 2% inflation number.
Yeah. Part of that. And
held it down.
Exactly. And
counteracted.
And technology, right? Because technology really helps with efficiencies and stuff. But those two things really, that was a driving force from the 1990s, but it really started after World War II. And then you kind of get into the Trump era, right? And this is just where things have shifted. And I'll talk about today and how we're investing and shifting our portfolio. And I'm not going to talk a lot about our business, but how listeners can maybe think about how the world has changed as of late. So you had Trump that came into office and he was, very outspoken that a lot of these trade deals that we, whether it's NAFTA or whatever it is, that they were broken, right? So that's where you started to see some of that decoupling of the deglobalization that was happening, or decoupling of globalization. But what really was the tipping point was COVID. During COVID, when, our supply chains essentially shut down, we could not get, whether it was N95 mask, whether it was medical. It really shined a light on how vulnerable the U.S. was and how dependent we were on all of these other countries.
Yeah.
And so that was really the tipping point. And then going into the Biden administration, with the CHIPS Act, they really put a focus on bringing back particularly semiconductor, so high-end chips, which are, in every laptop, every piece of electronics, every car now. Anything that has an on-off switch basically has a chip in it, right? So a refrigerator, everything we touch. So then that's when they implemented the CHIP Act to invest $50 billion into bringing some of these chip manufacturers onto U.S. soil. So the classic example is Taiwan Semiconductor, which now is building out that facility in Phoenix, which we talk about a lot. Samsung in Taylor, Texas, which is just northeast of Austin, Texas.
Mhm.
Those are two of the big ones, but you're seeing, the reliance and the focus from both administrations, both Republicans and Democrats, to bring back manufacturing
Right.
onto U.S. soil because it's a national defense issue. And as well as it will stimulate growth, right? It will make things more expensive. That's why we're talking about inflation and our thoughts around that. It will make the iPhone, I don't know how much an iPhone costs, $1,000. It's probably going to make it $2,500 now.
That's the kind of going conversation about costing for the iPhone. And just real quick, I want to jump in because we kind of breezed over. You're doing a great job explaining where we're at right this second.
Yep.
It's kind of easy to forget that in the 90s, Bill Clinton basically opened China to the American consumer.
Mm-hmm.
Imagine all of the things that you get from China and not having those. That's where that deflation
Everything
comes in.
says made in China.
My mom passes here, as you guys know, and I've inherited her home, and going through some of the stuff from the early 90s.
Yeah.
It's handmade Ethan Allen furniture, right? It's no one buys that now. It was expensive, right? That's why the cost of everything got cheaper, is because, and we're seeing this even in American automobile manufacturers, all of the engines are imported for Ford and Chevy. You've got a lot of engines being imported from China. And what that does to the American consumer is makes everything more affordable. That's why we have a huge boost in consumerism, all of that. So I just want to point that out as something that's happening. And although we're starting to do this, we still have major issues. I take a flight with you in your Cub, and you see all those, huge shipping merchants parked outside in the Pacific. We obviously work in commercial real estate. We're having a really hard time sourcing electrical components. So any of the gearing for large scale electrical infrastructure, 52 weeks out right now.
Wow.
That's
still.
And so
that's something that Jim Rickards talks about, that there's certain core components that are needed to just sustain normal life at capacity today that are going to be challenging to get. If you lose power, you're going to be jerry rigging things back together. You can't just show up with the appropriate parts. So it's pretty crazy.
Well, I think even some of the car, chips and stuff. My car has been having kind of issues recently, and they've had to replace the chips or because things are being made elsewhere. And there's just,
What was it that failed in she has a 2022 Tahoe. It's
I had a fuel injector fail recently.
okay.
It wasn't a chip, but when I bought my 22 Chevy, it didn't have all the chips. And so I had to wait almost a year for the last 2 or 3 chips to even come in. So it was weird. Yeah.
Well, I remember during COVID, the 911s, when they were re-released, they had a situation where you could custom order your 911, but it didn't come with the chip. You had to wait more time for the chip to come. Can you imagine that? Buying $250,000 sports car
and it doesn't have it.
Put Apple Play on.
Your CD player don't work. Or maybe that's the only thing that did work.
They took that out a long time ago.
Every Porsche owner around here is what?
Yeah.
Yeah. And I think just finishing up my point, where do I think it's going and where's the opportunity? I think things are going to get more expensive, but I think it's going to drive wage growth and jobs. And here locally. And I think that for folks that, you're saying, oh man, the iPhone's going to be more expensive. How do I even budget? Because things are already more expensive as they are now. I think that we're going to go into this period of higher growth, higher wages, better jobs, high skilled jobs. There's going to be a retraining of our workforce. But I think it's going to be ultimately very good for the United States. And so we are very focused on, in workforce housing, which is our specialty, where can we acquire assets that are going to be the biggest beneficiaries to be able to provide, affordable housing close in proximity to these massive growth centers that are occurring due to the onshoring, reshoring, friendshoring that's happening. And so as Blake touched on, Arizona, anything that's close to the US Mexican border is they're going to be massive beneficiaries. Cause I think as much as it gets talked about, Mexico is going to be and continues to be our strongest trading partner.
Right.
And there's a ton of investment that's happening cross-border with that relationship. So things like, Texas and Arizona, and then being in those major hubs like Dallas or Phoenix or in Austin or, San Antonio, whatever it may be. To
Also
me,
the Sun
is
Belt factor, because it's just life is so easily obtained and sustained in those areas versus being up in the north or where it's really cold. We have really good air conditioning now. Like, it just makes life way more livable.
Yeah. What's crazy is this worldwide focus on basically getting all of your consumer needs from China for the cheapest price has caused them to have a huge growth in their middle class. And now for the first time ever, wages are cheaper in Mexico for basic labor force.
Mm-hmm.
And now with China having the issues and more of that, like, I don't know, spotlight with tariffs, and another favorite word of Trump, tariff.
Yeah.
Best word. It's the best
I'm
word.
not raising taxes, I'm raising tariffs. It's the slogan. Yeah.
So China's now operating through Mexico. So like, it's going to get to your point, and you might as well bring it closer, because the scales are turning. Like, we should be kind of buying things a little bit closer. Hopefully we keep them in the US and we build more things, but we will have like this true up effect of how much we're used to spending on certain things, like the iPhone as an example. We maybe end up normalizing a $2,000, $2,500 cost on a phone.
Right.
But the phone companies are still going to give them to you. So you pay them there.
You just pay
and
a
you lease them for
monthly
36 months or whatever they are. Yeah.
Well, there's this whole conversation about how data is the new gold. And I feel like these are a data like mining machine for all these companies. There's cost benefit.
Yeah.
Cars now. My new truck, I had to check a box. They're going to record my data. And I said no. But like, I didn't know that was a thing.
Like, there was a chip in the car?
No, the car is now listening.
Oh, geez. The technology is such that it's
1983, here we
listening.
go.
So Ford is late to the party, let's say, or whatever the company is, but they're all going to record that voice data and sell it.
Interesting.
So
yeah, when Carly had the Mercedes, anytime you said Mercedes, it'd be like, hello, how can I help you? And it was really annoying because like you don't think about it, but when you're in a car, you say the manufacturer because things come up, right? You're like, oh, I got to take the car into Mercedes. Hello, how can I help you? It was very frustrating.
Oh, gosh.
But then like just the fact that it prompts digitally that it is actively listening to you.
It's just kind of interesting. And I think as all of this economy stuff kind of moves forward and we bring stuff back into the US, hopefully it's going to bolster the economy, but hopefully more truth comes out and less censoring, because free speech is our own right and we should be able to say what we want, and people should be doing interviews.
I just typed it and I looked it up, and then it said the YouTube search result was like messed up and it didn't pull up the right channel. Okay. But it looks like it's back. So YouTube must have stepped back in line. But
there you
go. Seems like you can find it. But nonetheless, there's been so much censoring. I mean, the fact with like Elon buying or Twitter and converting it to X, because he just got so annoyed with the fact that like a sitting president got his account locked.
Yeah. Which
that's just,
it's crap.
That's horseshit.
Yeah.
It's just like, no matter who the president is, even if you don't like him, you shouldn't, like, that's insane.
Yeah.
It's insane.
You can't block them.
It sets a bad precedent. I think like, if you think about the US brand as a whole, it's degrading to the US brand on a global stage. And and I think
that's what US is all about.
And
disrespectful to whoever it is, sending that message. Yeah.
Because it could be, the foot could be on the, the shoe could be on the other, on the other end. And it's like, you want to make sure that, you have fair and balanced, whether they be elections or political cycles. And stuff that I more care about is just like business practices too, right? Like with Elon buying X, and as I get really excited to think about, US being able to bring back a lot of these businesses, I want to see growth, because I think that the only way we get out of this huge, debt problem, 36 trillion, 35 trillion, I don't know what it is through growth. Like, I want the economy to be humming and wages to go up and inflation that will be also of result. But if folks are making more money, are more productive, or more efficient, then we can grow out of this issue and, you know, be the superpower that we are. And so that's what I get really excited about. So more like, you know, the political stuff, it all bleeds in, but you know, I hope that we can find a way collectively as a nation to be able to like lean into this growth and be able to support it. And, you know, maybe that's reducing some regulations or whatever it is. But, you know, I feel very optimistic on the future. And I think we're just kind of going through this learning period, you know, where, you know, it's going to swing the other way. And so I'm very optimistic. I know a lot of people are not, but I'm very optimistic on the future of the nation as it relates to investments primarily, because that's what I'm always really focused on, right? And I think when people can feel safer about retirement or putting their kids through college or feel good when they go to the grocery store, I think a lot of the angst and just anxiety and stress calms down. I think financial pressures are very understated on what that does to a nation and what it does to, you know, to the people.
Yeah.
Oh man. Amen.
Yeah.
Ultimately, though, on the flip side, not to be negative Nancy.
Okay.
But there's a lot of pressure too, because ultimately, when we're talking about like a very basic macroeconomic conversation, which is we basically, for efficiency, exported all of this. Well, that comes at a cost to the American public, but a financial gain to other people all around the world. So as we start to suffer here, right, because we've exported being the number one economy in the world, all over the place, as we start to feel those pressures of where places like, you know, the steel belt are now completely shipped overseas and all those people lose their jobs. And we start to see now we're like, oh, we're bringing on more consumer debt and we can't really afford, and we're not winning from a GDP standpoint. There's also a lot of financial incentive for the rest of the world to keep it going that way. And so we have to have a change.
I agree.
Change.
And then I'll give you one back. So from a GDP standpoint, we are still winning. We're 40% larger than that of China on GDP.
But it's shifting.
I agree. I agree long term, but we are still winning. And the United States is still the largest global power. And there's not really a close second. And I think China obviously is the one we're most concerned with, which makes sense. And I get it. But assuming we could do all the things that I kind of outlined, I feel very confident that we'll keep our lead and you know, expand that lead.
100%. All I'm saying is you have to win.
Yeah, I agree.
You have to, meaning the onshoring has to be successful.
Yeah, we have to do this onshoring. Like we're talking about bringing iPhone back. Well, that's not happening right now. Like no one's pressing for that. They're doing a semiconductor plant here, but the iPhone's still currently being produced in China.
Yeah, it's incentives, right? I mean, I think if you're Tim Cook, you're the CEO of Apple, if it's going to cost you, 3 times as much to produce parts of the iPhone in the US and your margins are going to get squeezed, you're not going to do that. But if there's incentive for you to come back, if it's more cost effective, then you will, right? Well, and it's no different than when we look at investing in certain states, right? And they might have higher regulation, whether it's rent control or whatever it is. We factor that in because we know it's going to be more expensive, and the returns won't be there, and it won't make economic sense for us to invest into those properties,
right? Because
we're not going to be able to get the return.
Well, which is going to be interesting on the tariffs. Like if we continue to outsource stuff.
Well, and it's happening. And just because you guys were bringing it up, I looked it up and I had heard something about it. But basically, Apple is moving to a better location in India. Not 100%, but they're migrating some of the iPhone production parts or maybe substantial hardware pieces to India.
Well, probably.
And I've been hearing that India is going to really benefit from this conflict with US and China.
Yeah.
And India is now going to maybe hit the map as becoming a big power.
Is their labor less expensive today?
Than that of China, you're saying?
Yeah. Like, maybe. I mean, obviously it's less than here, but
I think they're more capable and gifted in certain ways on the technology side.
Yeah.
So they're better at producing certain pieces is what I've heard.
Okay.
I don't know specifically the labor.
Okay. But that makes sense.
The only point I'm trying to make is in order for the middle class and lower class of America to see prosperity growth, that's going to come from our conversation today, which is tariffs, which is more shoring or reshoring into America.
Mm-hmm.
And there's really one political party that's pushing for that and another that it's not at all.
Yeah.
So we have to win. That's all I'm getting at. It's like, there has to be a change, because if we continue on the current route that we have, I feel like
that's the America First movement versus like a global outlook or forecast.
Yeah.
No, I think it's going to be an interesting, fun ride.
Yeah.
And like, I think it's really annoying for like our parents' generation, 60s and 70-year-old plus. They're like, oh, I'm happy I don't have to live through this shit.
Yeah, you hear it all the time, right?
Yeah, it's like, well, thanks a lot. I have a year and a half year old and a 4-year-old. So I guess hopefully I don't talk to you anytime soon.
Well, let's segue. I think that this is kind of your gift, is like, let's say that we don't win. And the American dollar continues to devalue and things get worse economically here.
Right.
What are some options for people who are listening to this to continue to maintain and potentially grow their wealth over time?
So I really think as much as I love mobile home parks and real estate, I think that those dynamics, being that we're only in the United States and in specific markets in the United States, that's just one level of insulation. And so I think if you're playing this global game of, and we are, whether you like it or not, the dollar is playing a global game, then you really should look hard at like saving real money, maybe just like whatever you would normally put into a savings account per month. If you're able to save any money, you should buy some gold and just stick it somewhere safe. There's vault companies that like we use, or you put it, we've heard of funny people in our life talking about cutting holes in their drywall and sticking it in hidden spots and then patching the drywall.
Putting it in their house.
I think that there's an argument for having a rainy day gold kind of hoard. Yes. I honestly do. I do it myself.
And there's also, if for somebody like, if for example, you aren't comfortable sticking gold bullion bars inside your drywall, or you don't have enough money to even buy it by the ounce, right?
Right. Or you can buy 1/10 of an ounce. You can buy small pieces. There's all kinds of mutual funds, ETFs, different ways that you can invest in gold. They're just more manipulated. And the idea of gold is to have it in your control and in your possession for the reason of a hedge and keeping control.
Well, I used to, in my prior firm, I actually ran like that process with the precious metal ETFs. And so the way that it works, and I've told you this, is that when you buy the ETF, whether it's backed by gold or silver, you buy a sliver of it, a share, and then that gold is then held in a vault at like say JP Morgan or Morgan Stanley or Goldman Sachs, at these large banks. It's held in a vault, right? And I've had colleagues that have gone and seen it and so forth. And it's basically like, okay, the gold gets moved over here to then this pile, right? Mm-hmm. But I think that what you're talking about, something important about being able to access it and hold it. And it's a good saving mechanism, but I would not steer our investors that gold is a great investment in the terms of,
it's a hedge.
It's a way to kind of keep something under the mattress that will hedge in the moment in time if the dollar devalues substantially.
Right.
Yeah. The amount of your buying power with gold will hold.
Yep.
Yeah.
It just holds the current level of buying power. It doesn't actually ever go up in value. It just holds comparatively speaking to the dollar and its buying power.
Yeah. Yeah, I agree.
Well, then what about investments? So if you've got a portion now either stuck in your wall or in the ETF, covered right.
So you're teeing me up with a nice beach ball.
Yeah.
So then obviously we like affordable, non-government subsidized housing.
Yeah.
And I mean, and I preach this, but like our Clayton Homes is owned by Berkshire Hathaway. Buffett didn't sell that. He's sold a bunch of other stuff. He's sitting on more cash than I think anybody ever has. It's like $250 billion, 250 billion. And he sold a bunch of tech stuff, but he still owns some like baseline businesses that are like Clayton Manufacturing, the mortgage company that basically, is the bigger issuer of mortgages for our space. But we're building homes at $50 to $75 a square foot. If you take that anywhere else, you're at $200-300 a square foot minimum.
Easy.
Yeah. Yeah.
And we've just been collectively learning on any little remodel, you get your ass beat.
Yeah.
We're remodeling our house right now. Went through full bidding process. I even know a lot of the trades. But ultimately, it's a couple $100,000 minimum, right? If you're going to remodel a house in San Diego, California.
Yeah, minimum.
Unless you're DIY in it.
A killer double wide from Clayton, professionally designed. They're gorgeous. We've toured these units, and you're
they're
like,
really pretty.
Wow, and they're really building to a higher quality. It I think is the future of housing, and it's really impressive.
And I think too, just one finer point on the investment front. The great thing about real estate, whatever it is, our bias, obviously, Blake touched upon, is that it's income producing. It provides you income. And as inflation increases, your principal balance, right? The value of that real estate increases. So it's a good inflation hedge,
Right.
as well as the income. Rents continue to go up. So your income increases. And so you're able to not only hedge inflation, but hopefully exceed inflation and be able to live off the income during your retirement years. And so that's why I love it, versus I love gold too, but gold doesn't produce income. Real estate produces income.
Yeah.
That's just the macro answer.
Right.
On the more real life, like that's what the show is called. And I've been joking with this, but the CashFlow Quest, all roads in your life lead to cash flow.
Yeah.
And that you need a baseline cash flow to survive.
Right.
Period. Whether that's from a pension, whether that's from Social Security.
W-2.
When you have a job, like your normal cash flow,
that cash flow,
you need to be tax efficient as best you can be.
Right.
So like while we're living here on earth and before we all kick the bucket, we should dial in our understanding of cash flow so that you can plan and then be tax efficient while we're here, tax efficient when we're gone for the next
generation.
In line.
Yeah.
And it's just so cool.
Amen.
So that's our story and we're sticking to it.
That's right.
Love it.